Okay guys, good morning. I hope you're all well. I hope you had a good weekend. This is going to be an interesting week, to say the least. It's difficult to know where to start, to be honest, but let's just look at how markets have fared over the Asian session and look at how some of these European markets have opened. And of course, just talk through the developments over the weekend on Greece, also on China. This is a big story on China that's perhaps is definitely not getting the attention it warrants or deserves, given the unbelievable events in Greece over the weekend. So anyway, clearly sharp risk off this morning with the DAX, or at least initially anyway. And it's quite interesting technically. Let's just take a look at the DAX here. So for most of last week, the DAX was up testing the top of my channel here. This is the downward trend channel that has been shaping movement over the last few months. And of course, you can see these wicks moving up above the channel, but not once did we close above it. And so this is really a kind of messy test of the top of the channel. And check out where we opened this morning. So we opened actually down below 11,000. Drove down to almost test the low point of this cycle to the downside of the last couple of months, but check out the response here. But full rebound, trading back up above 11,000. This puts the DAX currently down 3.75% on the day. That is 3.75% below Friday's close. Of course, we've got a pretty punchy candle in the making here as these markets try and just calm after the initial panic at the open. Here's the Euro Stoxx, which is perhaps it was also very interesting technically. Let me just get rid of that trend line. So what's happened this morning? Opened at 3,400. Initial drop down to test the June low. That's where support was found perfectly, and since then we've been through a 100-point rally. However, even with a 100-point rally, the Euro Stoxx is still down 4.2% on the session. So you can see we were down, I'd have to figure out the percentage here, sort of 5-6% at one point. So this has been a fairly sensational move to the upside already, and also a sensational move to the downside if you're looking at where these markets opened. I think the Euro has been the most remarkable, opening sharply lower last night as the Asian session got underway, trading down below the 110 handle. This is over a 1% drop, 1.5% drop as we were down around the lows. But if I just quickly go to a 1 hour chart, and actually some of these lines, actually I'm going to go to a 2 hour chart so I get a blank page here. So you saw S3 and the 110.40 area holding things up overnight. Then we had a pop to the upside, and we almost closed the gap here. It's quite remarkable. Friday's low is at 111.42, and the high point we got up to was 111.25. So the euro dollar almost closing the gap. Now it's stabilizing around the 111 handle. So we've seen this for the euro, of course, in recent weeks. A very complex reaction to the Greek events as they unfold. It's definitely not straightforward. But certainly the euro is still lower on the day by 0.7%, which in itself is a pretty big move. It's just, of course, nowhere near. We are 130 pips above the low of the day already. Now for the Bund, again, similar to the equity space, obviously, but in the reverse, in that we saw the Bund open right on June's high. Not June's high, mid-June's high, up around 152.48. Then we drove up to test the 153 handle. Before now, it's all begun to reverse somewhat. And so the Bund is, like equities, I guess, trying to close that gap that was formed, these huge gaps that were formed at the open. Okay, so this is the theme. Big risk off when you're looking at equities and bonds, except that the risk off moves seen at the European Open have been reversed somewhat, but still huge downside seen across the European equity space. I'm not going to bother talking about oil at this point, other than to say that oil's just ticking down below some of these support levels we've seen from mid-June, and so looking bearish, looking like we're going to yet again complete and travel across this range we've been in for the last few months, or last couple of months. But of course oil's not really relevant here in what's going on. So let's talk about and update you on the events. Of course you'll already know what's going on here. Let's talk Greece to start with. So quite amazingly, Tsipras chose to ignore or refuse to accept the latest Eurozone creditor offer and instead called a referendum. So you will all know already, we now have a referendum due for Sunday, and this is where essentially, and we still need to get the kind of final wording of what's going to be asked, what is the question going to be asked in this referendum, but essentially it's just going to be, do you want to accept the creditor deal or not? Now, that sounds simple enough on the face of it, except that it couldn't be more complicated and messy, because whatever Greece decide, of course, that doesn't really end the uncertainty. So I'll talk about what happens if Greece vote yes and what happens if they vote no in a minute. But before that, there's other stuff we've got to think about, because Greece the ECB over the weekend, they refused to extend the ELA. So this is the emergency lending to the Greek banking system. They haven't pulled it, they haven't stopped it, they've refused to increase it. So I think we're up at something like 89 billion if I'm not mistaken. So they're keeping it at 89 billion, they're not increasing the ceiling. Now therefore, Greek banks don't have enough cash because they need more to be able to fund what is, of course, pretty much a national run on the entire Greek banking system. The queues outside ATMs across Greece yesterday, of course, was front page news. So everyone's trying to get their money out, and now they can't, because without an increase in the ELA funding from the ECB, the Greek banks can't afford to allow depositors to withdraw funds, and so Greece have implemented capital controls. So the banks are shut. You are not able to cash any checks. You're not able to do any online transfers whatsoever. All you're able to do is withdraw 60 euros a day. That's if you can find a cash point that's got any cash, however. A lot of these cash points have run out. In fact, they run out, I think, hundreds and hundreds of cash points ran out of cash on Saturday morning. But what's going to happen this week is banks will remain under capital controls for the whole week, and you're only going to be able to get 60 euros out. Apparently, pension payouts are still going to happen. Apparently, civil workers, public sector workers are still going to get paid. It's just you can't access the money. It's going to go into your account, but you can't get it out. You can only get 60 euros out a day. Okay. Also, the Greek stock market is shut, and is almost certainly going to remain shut until after next weekend's referendum. So chaos is the word. Now, what happens over the course of the next few days? Well, of course, Greek headline risk remains, and what we're going to be focusing on now isn't so much what do the Eurozone creditors think. It's more about opinion polls in Greece, and it's actually how effective is the Greek government's campaign going to be, because the Greek government are going to be campaigning for a no vote. The Greek government, Tsipras and Varoufakis was out on the streets yesterday laughing away, actually, which is probably an error, but he was in good spirits and laughing and joking when the whole country was basically falling apart. But they're voting for a no, i.e. we refuse the creditor deal. So that would probably be the most straightforward outcome. I mean, the outcome with less uncertainty. That's because if they vote no, we refuse to accept the creditor deal, well, that's it. It's done. They default, and, well, I would probably say they leave the Eurozone. I think that's quite clear. If they vote yes, however, all we have at the moment is opinion polls before the announcement that a referendum was coming. So we had an opinion poll last week where they said if there was a referendum, how would you vote? But this was before the referendum had been called. And anyway, there does seem to be more support to vote yes than to vote no, i.e. vote yes, we'll accept the creditor deal and we'll get a bailout extension. However, we've got 5 days, 6 days worth of the Greek government campaigning for no. So I think ultimately how Greece are going to vote on Sunday is going to largely be determined by how effective the Greek government no campaign is going to be this week. And of course you're going to get the Eurozone countries trying to fight that by trying to do some kind of campaign for yes. Now, if they vote yes, this is complicated, because really that means the Greek government, that's a vote of no confidence in the Greek government. I can't see how the Greek government can implement a program that they were actively campaigning against. I mean, I think if the Greek people vote yes on Sunday, well, that's it. Tsipras is done. It'll be one of the shortest stints as Prime Minister in Greece's history, and they go. And there'd probably have to be some kind of national unity emergency government to come in and implement then or negotiate the finalising of the deal with the creditors, and then maybe the bailout extension can happen. However, before all of this, Greece have got a payment to make to the IMF tomorrow on Tuesday, and they're not going to be able to make it. All right, there's no way, absolutely no way, Greece can make the 1.6 billion payment to the IMF tomorrow. So the question is this a default? And bizarrely, the answer is really officially no. It's not a default, and that's because, the way it's set up in terms of Greek CDS and sort of Eurozone Greek debt, it's not a technical default unless you default on private credit, not on IMF credit. And so there is a chance that Greece don't pay on Tuesday, and what most likely is going to happen is Lagarde is going to have to officially say, look, Greece haven't paid, but that just means they're in arrears, right? That means they're just not allowed any more funding from the IMF until they make good on the arrears. So here's probably what's going to happen. They don't pay on Tuesday. We then have a political campaign over the next few days, running up to the referendum on Sunday, and then it depends what they vote. I mean, if they vote no, well then this will be a full default, because the ECB will pull the ELA funding entirely, leading to a collapse of the Greek banking system, and Greece will default, and it will probably be a very messy exit. I think actually from a political point of view, Europe are actually perhaps not, I don't think they're that fearful here. I think they might get the best outcome of all, weirdly. The best outcome of all for European politicians is for the people to vote for the downfall of the extreme left government that is Syriza. I think this would be a big success for European politics, because if you're worried about other extremist parties in other countries, like Spain, for example, coming to the fore and maybe disrupting the conventional political balance, well, if the Greek people vote yes, we'll accept the creditor deal, that's basically voting against extremist far right or far left governments, and I would expect the Eurozone to actually see this as perhaps the best possible outcome. So that's a bit of a mess, clearly, and what we're going to get this week, what you're seeing I think in markets this morning is that initial panic, what's going to happen now, but then I think when you look through it, really this perhaps isn't it yet. This isn't the big moment where Greece get chopped out of the Eurozone and go through an economic disaster. I think that comes only if the Greek people vote no on Sunday. So this is what you're seeing in markets this morning. You're seeing a rebound from that initial very large-scale risk-off, and I'm still seeing European stocks rally. The DAX is now testing the May low. I think you're now seeing people read the situation slightly differently than what they read it at the open, and that is that actually, if Greece vote yes at the weekend, yes, it'll still be complicated. Yes, the government will probably get kicked out and we'll have a little bit of uncertainty on how the political system is going to be run, but ultimately this will pave the way for Greece to get a bailout extension. They will then pay the IMF and make good on their arrears, and they'll have to set about reforms that ultimately are what's needed. So we may well see the best outcome of all for the Eurozone. This is a bailout extension, Greece forced through the reforms that Europe want to make them see, and the bonus on the top, Tsipras gets voted out, the extremist government fails. So I think you're seeing a bit of a calm since that initial panic this morning. But look, we still need to get some opinion polls as we go through the week. This is going to be the key news flow this week. Opinion polls on how the Greek people are going to vote on Sunday. What's the actual question going to be on Sunday? And how effective is the Tsipras government's campaign, their no campaign, going to be? Can they brainwash the Greek people into believing the no vote's the best way? I think that is a very difficult sell. I actually think right now I'd say Greece will vote yes on Sunday. Tsipras government fails. We get a bit of a temporary mess in terms of the political situation, but then ultimately Greece at some point get their bailout extension and we move forward. So it's all down to the Greek people now. Now, on top of all of this, I mean, and as I've said, completely, it's not even, if you go onto the FT homepage and there's nothing. There is not one. I'm just looking on the FT homepage right now. Let me see. There is not one mention of China, which is absolutely remarkable, because in China over the weekend, again, huge news. The People's Bank of China did a double whammy of cutting interest rates and cutting the reserve requirement ratio. Now, initially, thinking about Chinese equities, initially the Shanghai Composite opened up about 4%. This is after it got absolutely slammed last week. It closed down 7% on Friday. It opened up 4% on the positive news, monetary stimulus coming in, trying to prop up the economic activity and actually really trying to prop up the equity market. I think what the Chinese government have tried to do is fuel an equity market boom in order for perhaps the banking system to contribute more to GDP, to offset some of the loss of GDP that's coming out of the sort of manufacturing and housing sectors. Except that now the equity markets are in free fall, and they opened up 4%, but it looks like they're going to close down 7%. So that is an 11% swing on the session, and that puts the Shanghai Composite into bear market territory, down something like 22-23% off the highs that we got a couple of weeks back. So absolute carnage and almost unprecedented volatility in Chinese equities overnight, and in the end a very negative response to what was a very aggressive double monetary stimulus announcement from the People's Bank of China. That has got to be a concern, I would say, to say the least. So we've got to keep our eye, if we can, on China, as well as, of course, the unfolding events in Greece as we go through the week. Now, let me bring up the calendar, because on top of all of this, it's also a very important week for data. So let me bring in the calendar, and let me just show you today. One sec. So we've got a load of German inflation numbers today. So we've got some regional inflation numbers coming at 9 o'clock. Brandenburg, Hesse, Bavaria. The Eurozone inflation situation has been very important. Recently, we've seen this remarkable turnaround in Eurozone inflation, and this has had a pretty dramatic effect on long-duration bonds, yields jumping back higher. We've seen this have an effect on the euro, the euro's inability to sell off in the face of the pending disaster that could be Greece. So these inflation figures are important. Is the Eurozone rebound in inflation going to continue? We'll get an update on the regional side from Germany this morning. Also, we get some confidence data. UK money supply data, confidence data out of Europe, Then into the afternoon, pending home sales is the big data. Okay. Tuesday. Well, let me just bring up Tuesday's calendar. So here's Tuesday's calendar, because the thing about this week is it's a shortened week from a US market point of view, because US markets are shut on Friday, ready for the Independence Day bank holiday. Well, Independence Day is actually on Saturday, but they have the Friday off because it falls on a weekend. It means that the Friday becomes the bank holiday. That has implications for data this week. I'll come to that on Thursday. But look, here, Tuesday, UK final reading on GDP. We get the full reading for inflation for the month of June from Europe at 10 o'clock. That's a big figure. We also get the unemployment rate. In the afternoon, Chicago PMI is the highlight from the US. If I showed you Wednesday now, quickly, this is what Wednesday looks like. Loads of data out of Japan with the Tankan survey. You get manufacturing updates, the preliminary reading for June manufacturing in China. Sorry, that'll be the final reading for June. Then we get manufacturing PMIs out of Europe, including the UK. We get ADP employment change, manufacturing data out of the US, construction spending, the oil figures, of course, as usual. Or I say as usual, sorry, no, the oil figures will come, no, that is right, as usual on Wednesday afternoon. Then Thursday, so Thursday turns into the big one for data, because non-farm payrolls is normally the first Friday of the month, except that that's a bank holiday, so it's now going to be on Thursday. So non-farm payrolls will be due at 1:30 on Thursday, so it's going to be a manic period, because you're going to get the jobless claims numbers at the same time. So Thursday, of course, all focus will be on that. We also get, actually on Wednesday, I think we get the ECB minutes from their previous meeting. But big data, the big data day for the US is Thursday, beyond any doubt. Current expectations for payrolls after the very punchy figure that we got for May, 280,000, remember. We're expecting that to drop back to 225,000. So Friday will be Europe-led, and that's because the US is shut. Services sector data out of Europe throughout the morning. We get Chinese figures as well. But of course, this will be and retail sales figures out of Europe as well, actually. But this will be the final day of trading before Sunday's referendum. And by the time we get to the end of the week, we're going to know exactly what the question is, how are the Greek government going to phrase the question for the referendum. We'll then have a much better idea as to how effective the Greek government's no campaign has been, and we'll get opinion polls through the week, and we'll be able to get a much better gauge as to what perhaps the outcome might be for the big one, the big referendum on Sunday. So there we go. If you're not interested and you can't get excited about this kind of stuff, well, then you're in the wrong business. This is going to be a phenomenal week. I think it's not going to be necessarily easy. I think you've already seen that. If you got in this morning and just said, well, no brainer, I'm short and I'm going to stay short for the rest of the week, well, you've already been stopped out. And that's because you've got to understand this is not the big event yet. This is not Greece defaulting, and even if they don't pay, when they don't pay the IMF on Tuesday, that's not them defaulting. You're not going to get credit default swaps triggered, and you may well see Europe just put everything on hold until the referendum on Sunday. And if they vote yes, well, I think this is a major victory for Merkel, for example, in ousting the one extremist party that's managed to find its way into government in Europe. So let's see, guys. Enjoy the week. Thanks a lot.